It sounds like you think, and this may seem simplistic, but that the CDC guidelines on masks are going to have some impact on how we deal with technology in general.
Well, Carl, don't you think so? I mean, it seems to me that the big news today is not so much inflation or what the Fed is going to do next, but that the economy is clearly undergoing a big change. I mean, we had a pandemic that had enormous impact on people's employment, on their ability to spend. So we started to transfer economic activity from the private sector to the government, which redirected into the pockets of people who'd been affected by the pandemic. That was unbelievably good for Amazon, Facebook, Google, and the like. Now we're in a situation where, there's some inflation showing up. And we are faced with the challenge of dealing with the structural flaws in our economy that were exposed by the pandemic. The fact that we couldn't make cotton swabs or PPE when we needed them. And it feels like Biden's strategy is to move on to infrastructure and deal with those problems as the next step, which has further implications for inflation, has further implications for investors on allocating the economy. And so to me, what's going on, Carl, is that for tech investors, we're looking at a possible transition where, the share of the pie going to tech is going to be lower for a while. And how that turns out remains to be seen. But I think we shouldn't lose sight of the fact that if assets and spending go into infrastructure, that's going to unleash a whole pile of other investment opportunities, including, green tech and things that are associated with, environmental stuff.
I can see how, say, for example, the share of e-commerce on retail maybe gets a little bit of a shave, Roger. On the other hand, people would argue the labor shortage is going to make small business turn to kiosks and software, and that corporate are going to reinvent their IT budget as they have some marginal number of workers maybe working from home more often. And we've actually seen some PC sales forecasts inched up because of that.
I think all of that is true, Carl. What is unclear to me is which parts of it are sustainable and therefore are going to allow us to really enjoy a ride. And to me, at the bottom of this whole thing is the government spent 40 years with an ever diminishing role in our economy. And now its role is much bigger again. And I don't think any of us knows exactly what that's going to mean. What I do know is that relatively speaking, tech was the biggest beneficiary of the old model. And how big a beneficiary it is of the new one just remains to be seen. My point is only that it's uncertain, not that it's bad.
Roger, it's Morgan. I mean, we're having this conversation about reversion to the mean, essentially. We could talk a little bit about inflation and what longer term potentially higher interest rates or continuing to climb interest rates, I know that's a debate right now, could mean for these names as well. The other piece of the puzzle, though, potentially is a higher capital gains tax rate. How do you see that factoring in, and what does that mean for some of these, at least until recently, highest flying tech names?
Well, let's be clear, Morgan. Obviously, if interest rates go up, there are very few industries with more surplus cash than big tech right now. And so they're likely to be, at least in some ways, a beneficiary of that. Higher capital gains rates are obviously an issue for the market. And exactly where that turns out, the proposal is a huge change, but it still has to pass. And we'll see where that turns out. But in my mind, the thing that we're supposed to be doing right now is just recognizing that a transition's going on, and there will be huge opportunities coming out of it, but they may be different than the ones that we had going in. And that shouldn't scare anybody. I think that's just life.
So as an investor, where are you putting your money to work right now, Roger?
Well, so it's a funny thing you ask. I have been very focused on a specific venture opportunity that I'm working on that is in intellectual property. And it's the kind of business that's not really related to what's going on in the broader economy. And so, I'm trying to stay away from the things that are incredibly volatile. I still own Apple shares, and I still own some Amazon. But realistically, at the moment, I just feel like we're going through this transition, and I don't yet know where it's going to land. And so I'm being more cautious about new investments, hanging on to the things that I liked from before. But, in terms of new stuff, I'm looking for things that are going to be successful irrespective of what happens in the economy.
Shepard Smith here. Thanks for watching CNBC. on YouTube.